The loan platform business that SoFi recently started could be absolutely game-changing for the earnings report coming out at the end of the month within 21 days or so. And I just can't emphasize enough how big I think this part of their business is going to be. It's absolutely game-changing in my opinion, and I think that it's completely being overlooked by a lot of analysts and a lot of people in general. To give credit where credit's due, I just saw this video by Data Driven Investing, and he does a lot of SoFi stuff on X or Twitter. You can watch, I'll link to his video or his channel here somewhere. He does a really good job in kind of going through what the loan platform business does and kind of explaining it and kind of seeing the revenues and the benefits and potential problems that the loan platform business might have. And after watching this and then doing my own research for a little bit, I just think that this loan platform business almost encapsulates exactly what SoFi is. Just a really, really strong business that is super risk averse. They're the slow and steady that's just going to keep getting bigger and bigger and bigger without anyone noticing. They're not going to be any flashy like AI startup or whatever. They're just going to keep slowly getting more and more customers and getting bigger and bigger without exposing themselves to too much risk. And that's what this loan platform business is. And I believe that this loan platform business basically summarizes exactly the mentality of management. They want to steadily grow bigger and bigger while getting more and more revenue while being as safe as possible. So if you didn't watch the video that I just linked to a few minutes ago, too long didn't read what is a loan platform business. Basically what it is SoFi is the broker or the middleman between a loaner and a loanee. SoFi finds a customer and they find the person that's willing to loan out money, and then they pair those two people together. So first point of contention is people say, oh, well, that's bad for SoFi. Isn't that doesn't that mean that SoFi is just cannibalizing themselves? Those were potential customers. Why would SoFi do that? SoFi wants to maintain an average credit score as high as possible. People that are requesting those personal loans that SoFi is pairing with those loaners, those people have credit scores that fall below what SoFi is actually looking for. So it's not actually cannibalizing themselves, because that would be the same thing as saying, oh, if I ate meat next to a bunch of vegans, the vegans would be mad at me for eating their food. That's not what it is, because the vegans would not have eaten the meat to begin with, right? So SoFi wouldn't have serviced those loans to begin with because their credit score is too low. Those loans would bear too much risk for SoFi's balance sheet. And the reason why I like this idea so much is because this gives SoFi so many benefits without being exposed to all the risk. I talk about how much Nicholas Taleb has influenced me. He has a book called Skin in the Game, which basically states that you should only really trust someone if they have skin in the game, if they have something important that they might lose if that thing that they created fails. For example, I forgot what he got. I think it was Hammurabi's Law, but Hammurabi's Law states, if I'm saying the name correctly, if you build a building and that building collapses for some unknown reason, you would kill the architect. So it's in that architect's best interest to build as stable and as strong of a building as possible, or because they'll also get executed, right? So it's the same exact thing. So in the case of personal loans, if your credit score is already dog crap, then you don't really have skin in the game, so you don't really care if you just defaulted on your loan. That's why SoFi is only creating these personal loans for these high credit score users, because they have something to lose. So that's the argument against this first point of contention when people are saying SoFi is cannibalizing themselves by giving business to other people rather than keeping it for themselves. Aside from that, SoFi also gets this referral fee, they get servicing fee, and all that stuff. Additionally, just because SoFi is too risk averse to give a personal loan to these people, it doesn't mean that those people can't use SoFi's other products. For example, they can still use SoFi Invest, they can still use SoFi Relay, they can still use all these other things. Just imagine some person, he sees a SoFi commercial talking about personal loans and he applies to SoFi for a personal loan. SoFi sees his credit score is, let's say, 580, right? And then SoFi rejects this person. Well, this person, since they got rejected by SoFi, is probably deterred from joining the SoFi universe, and they're not going to download SoFi Relay, SoFi Invest, SoFi whatever, because he felt offended. In that case, then he would maybe go to somewhere else. But now with this loan platform business, SoFi still technically accepts their loan, but they take the loan and then they give that loan, like they take someone else's money to service that loan, right? They take another business to service that loan instead of using SoFi's own balance sheet. In that case, then that customer who would not have previously been a customer is now a customer and inside the SoFi universe, where once SoFi is already servicing them, this new customer has a higher probability of downloading and using the other apps that SoFi has. And if they put money in, let's say SoFi's Theta, right? It's almost like a dividend yield type thing. SoFi gets revenue from that user using that product. The coolest thing, and I have to reiterate this, is they get all the benefits. They get the servicing fee, they get the referral fee, they get this new customer that's on the SoFi platform. This customer is now more likely to use SoFi's other products, and they get all this without bearing any risk, right? In SoFi's mind, would you rather have some risk and then get a little bit more money, or would you just shoulder no risk and you still get a majority of the benefits? Obviously the latter, right? In this case, that's what SoFi is doing. They're shouldering no risk or like very, very minimal risk for most of the benefits, right? This is low-hanging fruit. And another thing is, in having the loan platform business, this makes every dollar that goes into marketing, that goes into advertisement, it makes those more efficient. It makes the money used in marketing more efficient, because now a person that would not have been your customer is now joining the SoFi platform. This user found this advertisement, they applied, and they now are granted this loan when they previously would have been rejected. You have this new customer now from the same ad. So what you would have been just money thrown down the drain because this person would have been rejected from this personal loan, that money has now been actually put to good use. It's been converted to an actual user of SoFi. So like this loan platform business is actually really, really strong in my opinion for so many things of SoFi. A customer who would not have previously been put onto the flywheel is now put onto the flywheel. Albeit they don't make as much money from actually giving them the loan, but they get money elsewhere, right? With zero, as I said before, with very, very minimal risk, if any. Because this money, the loan that this person is taking is not on the SoFi balance sheet. It's on someone else's balance sheet. They just get all these other benefits. It's ridiculous. And I just want to touch on on a few more subjects, namely talking about how you can see SoFi being risk averse through various things. A lot of people, I had this in a previous video a while back, maybe a few months now, but how people kept thinking, when is SMB banking coming? Or when is a small medium business bank coming? If you project, I'm sure SoFi has a lot of data, right? They look at data everywhere. If you think that the economy is in some type of struggle, if you see any crack in the economy, that's a risk. And then why would you lend money to a small medium business, small to medium sized business, when you think the economy might be showing some signs of weakness? I think, in my opinion, this is probably why SoFi doesn't want to go into business banking yet, because it's just the risk reward isn't there. And I believe that SoFi has a really, really low tolerance for risk, which, yeah, you could say it makes it so that the business isn't growing as fast, but it's growing steadily, and you see it expanding everywhere. They're just picking the low-hanging fruit, and they're doing it perfectly fine while the economy is chugging along, right? Sorry, my throat's completely pooped. I don't know what happened. I have a sore throat. But I believe that SoFi probably is in the same mentality as Warren Buffett, right? Be greedy when others are fearful. Be fearful when others are greedy. And I feel that SoFi is in this fear mode because you see like the market euphoria. You see stock markets just going up, like up and to the right. Like they're just all moonshotting. I think SoFi might just be looking and waiting for a correction or some type of something to kind of release the stress on the market so that we kind of get back to like a more reasonable growth rate or like a more healthy economy before they start introducing business banking. This is also my opinion why they're not allowing level 2 or level 3 option trading. It's because the people that are actively option trading, they're more likely to be gamblers, right? You look at the users of Robinhood, right? Those people are more likely to be gamblers. If you have a Henry, someone that's a high earner, not rich yet, and they're blowing all their money on options, if they get blown out, you had the money that you had previously had in their personal banking it just goes poof, right? Because they had to pay off that, because they had to use that money to pay off their options failures. So I think that SoFi is basically just trying to get as much money, as much AUM as possible, assets under management as possible, before they allow more options trading, because they just want to increase their AUM as much as possible while loaning it out to the least risky customers that they can, right? And they think that that's low-hanging fruit. That's a safe low-hanging fruit that you can get without exposing yourself to any black swan event, or to minimizing the risk of any black swan event occurring. So those are my thoughts. Those are my opinions. My throat feels like poo-poo right now. I'm super excited for the earnings report. Let's go SoFi.